Hey folks, Julien Regoli, CPA CMA Finance Coach. Today I'm going to talk to you about RRSPs. RRSP stands for Registered Retirement Savings Plan. So big deal, what does that mean? I'm going to go straight to an example to show you the benefits. We've got two investors here. We've got Justin. Here, let me get my pointer. We've got Justin here and Jason. They both made a salary of $50,000 in 1 year. And Jason decided to put $5,000 in his RRSP account. Justin decided to put nothing. And here's the benefit. So at the end of the year, when Justin does his taxes, he's going to report taxable income of $50,000. And Jason, he's going to report a net income, a taxable income of $45,000. Okay. So the effect of the RRSP deposit reduces the taxable income. So if we apply a 35% tax rate, the income taxes Justin is going to pay is $17,500 for that year, and Jason $15,750. Represents a saving of $1,750. Now keep in mind, folks, that this deposit that Jason made belongs to him. It's not a deposit that goes to the government. It's not made to anybody. It's his money. So he basically deposited in an account, which is a special account called the RRSP account, and because of that, reduced his taxable income, and because of that, reduced his income taxes. That's the benefit of an RRSP. Reduces your taxes, deposits reduce your taxable income. Any money, the other advantage is that any money made in this account, like interest or dividends or capital gains, that is taxed much later, meaning you're taxed. I'll explain a bit later how the RRSP works, but basically when you earn dividends, interest, and capital gains, you're not taxed on that while it's in the RRSP account. It's amazing. Taxes are paid much later, like I explained, and it's called a tax deferral incentive. Okay, and what's cool also with RSPs is that the deposit limit accumulates. So say 1 year you didn't have enough money to contribute or to make an RSP deposit, it doesn't matter. That room that you had is added to the following year, so it accumulates. You never lose the opportunity to deposit. So here's some more details. So for who is it? So anybody who pays taxes on their salary should be looking into an RSP. What is it? All it is, folks, is an account that allows you to save and pay less taxes. And it's something the federal government created to motivate Canadians to save, all right, by delaying their tax bill. Registered means that there are some rules and limits. Okay, so there's some limits as to how much you can put in this account in terms of deposits, which I'll cover in a second. And there's rules on how much you can take out of this account it's called withdrawals. And there's also timing rules. There's time limits, the time rules that you got to follow. It's really easy. You just call your bank. You say, look, I want to open an RSP account, and they're experts at that. They'll do it in a second. The cost is minimal, if any. Here's something I hear often: is RSPs are risky. This doesn't make sense because you can hold pretty much anything in an RSP. You can hold cash, you can hold bonds, you can hold mutual funds, you can, I think you can even trade options in your RSP account. So it's not risky at all to open an RSP account. Whatever you do once the money is in there, that determines whether it's risky or not. I recommend, you can open both a Canadian and a US RSP account. I recommend you open both. And you hold at least 25% of your investments in a foreign currency, like in US dollars. So the reason for that is if you buy and sell investments in US dollars, you're not forced to exchange in Canadian dollars when you buy or sell. You just you can keep it in US dollars and exchange it when the timing is right. So what else? What's the catch, you're going to ask? Well, really, it's really 100% advantage to you to open up an RSP account, but there are some rules. For example, you're going to pay taxes when you take money out, and that's usually at retirement. And it's taxed like at the salary level. And what that means is the way the tax system works is that certain monies earned are taxed less than others. For example, capital gains has a favorable tax structure. Dividends also. However, interest, for example, attracts a very high level of tax, and also salaries. So it's taxed at the highest tax rate when you withdraw from the RSP. And the more, like salaries, the more you take out in 1 year, the higher the tax rate. It works like that. There's an annual limit. As of 2020, you can deposit a max of 18% of the previous year's earned income, up to $27,230. That's the rule. And every year they adjust that. And it's available. Just Google that and you'll find the limit right away. It's expensive to take money out before retirement. There are conditions there are times when you can take it out, and I'll explain that in another video. But usually, whatever you put in there, it's to keep there, and you take it out once you retire. That's the whole point of it. It's to entice you to save money, not to start taking out money from this account. If you do take it out, you're going to pay a lot of taxes on that, and you're going to lose your contribution space. So you remember I told you how your there's like a limit every year. Well, if you add a deposit in there and then you take it out, well, you lose that space. So that's gone forever. You got to contribute before end of February each year to take advantage of it in your tax filing. So key takeaways, folks, from this video. Look, it's just an account. It's not complicated. It's not risky. Start right away. Don't delay. If you're paying taxes on your salary income, start right away. Call your bank. You tell them I want to open an RSP account. Meet up with them, whatever. I think you can even probably do it by phone if they have enough information on you. The fees are minimum, if any. And I would set up automatic contributions, with your employer. So have your employer deposit a percentage straight into your RSP each paycheck. This way you don't have to think about it. You can hold any investment in this account. You can have a Canadian RSP account. You can have a US RSP account. It doesn't have to be either or. You can have both. Contribute regularly, like I said, and make sure you remember the end of February deadline. So next steps, leave your comments, much appreciated. If you like this video, hit the like button. This channel is going to have lots more coming, lots more useful topics and tips on how to invest and how to build your wealth. So subscribe to my channel to stay tuned. And if you have any questions or you want to book a personal consultation with me, you can email me at regolij@gmail.com. It's available at the bottom of the screen. So thanks for listening, folks, and we'll see you later.